those details. Well, to take this discussion forward, we are joined on the show by Jayesh Mehta of DSP Finance to discuss this further. Hi Jayesh, welcome to the show. First of all, I want to understand from you, what does this re-rating or rather the upgrade mean for the Indian rupee?
So I think this was something which India was really eagerly waiting for years, and it has certainly come on its own without even like we trying it. So that's a very, very positive news. Unfortunately, our circumstances today are not too great. I think a couple of things which is weighing. While we got the upgrade at the same time, we saw last month deficit being higher, but that's okay. I would say still people will take it in the stride, but I think the long weekend and news awaited in this long weekend is what something people are looking at, and that's what the nervousness is all about. So even if we get slightly positive on the weekend, Monday we can really see gap down appreciation of rupee.
Any movement yet, but you're hopeful that Monday open we'll see some movement in the Indian rupee. But secondly, at
Either
a
way, it could be either way.
right. But at a macroeconomic level, how do you overall view this upgrade? How encouraging is it?
No, so I think we kind of got vindicated, right? We have been pushing this for almost like 10 years, right? So 2014 onwards, we have been pushing. Our macro has been pretty good for last 3, 4, 5 years, especially, current account deficit also has been under control. And yes, we do have some FPI outflows going on, but then even in spite of that, we have actually managed to do it very well. That's the biggest shock we had, right? But we still manage with so much of foreign investors outflow. And right now also the weakness we see in our currency is mainly because of the outflow being tracked by the market and the traders on a daily basis, right? So from that perspective, we may see some change at some point of time, but having said that, we have taken this in our stride, and this upgrade is definitely very, very positive news for India.
Like you said, it is in the light of the various headwinds that we've been facing and still, powering through those. Another one is the US tariffs. In fact, S&P Global has said that, the impact of US tariffs on India will likely be manageable, and this is despite a 25% tariff that was announced recently. So how do you view these comments, especially in the context of US tariffs?
No, so it is right. So if you really look at it, the impact of U.S. tariffs, see, it's like a 50% tariff. Is like you can assume it's like a ban, right? So it's not that it is any joy. Like somebody actually had said today, like whether it's 50 or 50, then 5,000 is one and the same, right? So at 50%, it is anyway not workable. So assuming things do not settle out and stuff like that, then at 50%, now whether you make it 100 or 50 or 150, it doesn't matter. Then what happens is, yes, your export to US, your partner will get impacted, but it's not only that, right? So that we can find some other buyers. Maybe the overall impact, if we say broadly on the GDP, will not be more than 0.5%. Like that's what most of the economists say, like around 0.4% or so. But the ripple effect of that, right? Because there would be loss of job, there would be loss of business. I think that's what we need to be more worried about, rather than whether that 50 becomes rationalized to normal 15, 25 or so, 20 or so, or it goes haywire. It really does not matter beyond 50.
Right, and as S&P Global also notes that long-term prospects still remain positive despite these tariffs. Finally, I want to understand, talking about US and talking about rupee, there are expectations of a US Federal Reserve rate cut, which might also pull the dollar index lower. How do you view that and the Indian rupee?
So I think with the initial, firstly is the weekend. If we see some respite on the U.S.-Russia talk and the follow-up of that, the expectation positive or negative, both will be built for India. If it is positive, though, we'll see that on Monday morning. If it is negative, also we'll see on Monday morning. But at the same time, having said and done, if we are stuck with 50% tariff now, like what happened with China, 50 became 100, 100 became 135. Beyond 50, it anyway does not matter. As long as there are no other strictures on the country. In that situation, yes, there will be some thing, but people will get back to their stride, start working on, say, 40 basis point lower GDP growth. And of course, US rate cut would definitely help. The globally bond yields way soften, and it would definitely help the money flowing into other parts outside the US. So if there is a rate cut in US, that would kind of help India. And of course, if the situation becomes positive, the Russia, Ukraine, US, China, all that tariff talks materialize, something that would be double whammy positive.
Friday's meeting between US and Russia will be something to watch out for. Thank you so much, Mr. Mehta, for joining us here on ET Now and sharing your insights.